a little more methodically. In fact, for the finance portion part of it, I'll be using more of examples as well as more of PPT slides also. So it will be a little more explanatory in that sense. So we have sort of ensured that, slight, I believe, shifting up by 1 week is there, but we have ensured that there is no rushing through at the for the aspects that we had planned to cover.
Thank you, sir. In fact, even if it takes one extra class, we don't mind. As long as you work,
if
not
we can have a
bothering
session, a live session also, not a problem, sir. If you feel that at some stage you feel that I'm a little fast, you can certainly write to me. In the live session, I can certainly cover that also. Not a problem, sir.
Sure, sir. Thank you.
First, okay, yes, Ramnik, I've seen your message. I think it'll catch up. I mean, more from the point of view of learning. That is what I focus more on. Because all the videos are edited now. From my side, it's all done. Only the transcript part of it, as well as there are two files, as I indicated in the last class. One is a transcript, a general, very basic transcript. The other is a edited material, which you could use as a reading material or a reference material also, which is also comes from the transcript. I mean, that I'm working on now. Hopefully, I should plan to finish it in the next week or so, a week or 2 weeks maximum, because I had some delay because I was out on some personal emergency for about 2 weeks. Now we think we are sort of getting back to track, and we will be putting that up in a week or maximum 2 weeks, the whole thing. Not available in the nearby libraries. I mean, Ms. Vaishnavi, I think these are the reference books which I have followed. Any accounting, a simple financial accounting book or a cost accounting book and a simple basic finance book is also fine. I mean, if this, the book what I suggested is not available for finance, you can look at Financial Management by Prasanna Chandra, Financial Management by E.M. Pandey. All these books will also suffice, or all these books will also cater to what I have covered. It is the same thing because it's a basic course. Am I with you, Ms. Vaishnavi? So, I mean, these books are because there are a host of financial management books. Right from, I just pick up this book because this is, I've been using this particular textbook in finance, Ross and Westerfield, for quite some years now, and I find it enjoyable reading. I mean, you can refer to the Indian authors' books also. It's equally good, and it's not mandated that you have to get these books. Well, I have made it more and more conceptual than taking some hundreds of problems and solving it. That has not been the focus of this course. The focus of the course, as I said in the first live session itself, it's been more on the conceptual side. Giving you an idea about the concept, so that you can understand, read what goes behind in terms of accounting, so that part of it will be clear. That has been the emphasis, that's been the focus of the course, and that will be the focus in the finance part also, sir. I think, Ranganathan, you had asked question, doubt in the email, and I have clarified and I have responded also.
Yes, sir. I got it. Thanks. Sir, one more question I have in the
Sure.
week 8 assignment quiz. Question number 4. I don't know whether I'm mistaken. One of answer doesn't seem to be matching.
Okay.
If there's any error, I want to know.
I will just check, sir. I'm just going to check now because my student.
I'm not sure whether it's also facing.
Question 8, is it? Yeah, 8. I opened it. Which question number, sir?
Question number 4.
4, is it? Okay, one second. I'm just sharing. I'll just share my screen, then it becomes easier. Yeah, I've shared my screen. Because my TA will join in a few minutes. So, data within single product appears this way. Okay. Fixed expense is 531,000. The company is currently selling 4,000 units per month. The marketing manager would like to cut the selling price by 14 and increase the advertising budget by 35,000 per month. The marketing manager predicts that these two changes could increase the monthly sales volume by 500 units. What should be the overall effect on the company's monthly net operating income due to this change? We can just use an Excel and also solve it. I can just share that Excel and solve it right away.
Sir, this quiz is still open, so I don't think we need to answer that.
Okay.
I mean, if the options are correct, then I will not. I will have
options
to
are correct,
reconsider.
sir. I have verified this. All the answers I verify, and
Okay.
options is correct, sir. I'm sorry. The
Okay.
options. Yeah, I think it
Thanks.
was in yellow, so it became visible. Because all the answers I solve it, and only then Suhel prepares, and I solve it, and only then it gets uploaded. So it is correct. Because in the finance part, your doubt, Mr. Ranal, what we cover is we cover valuation of bond, valuation of stock, net present value, that is the time value of money part of it is what I focus on, and then valuation of bond and stock, followed by time value of money. Time value of money followed by these two, and then spend a little time on the capital budgeting part of it, the cost of equity, cost of debt, and WACC, that is weighted average cost of capital part of it, and a little bit on the risk and return, and that is all what we are covering in the finance part of it.
So basically, what you mentioned in the beginning was financial management is all about how to raise the capital,
yes,
equity or debt, and how do we channelize this for maximum profitability?
Yes. How do we identify the project which gives us the maximum return? That is what we do. And what is the best source for raising money? That is where cost of capital comes in, cost of equity, cost of debt. Because idea is the cost of the raising the money, equity or debt has to be low. So that is where that part comes in. How do I invest so that I get the return? That is where the time value of money comes in. That is where I sort of invest, and the NPV, net present value, or the internal rate of return basically comes in there.
Sir, again, like I asked in the earlier question,
sure.
The textbook what you have prescribed in the latest version also talks about little bit extra thrust on the service industry.
Yes.
But going forward, if you can also add one or two examples related to service industry, it will be good, because I come from service industry background.
Yes, I know. But in the recordings, what I've done, I have not added it. I can certainly bring that up during the live session, sir, if you can specifically indicate on the if you can specifically indicate the aspect for which you want a live service industry example. I can build an example. I can share it with you or email as well as in the live session. In the recording, I have not done it with regard to any specific industry, sir, as of now. I can certainly incorporate it. Not a problem.
So if you have time, probably can briefly tell how break-even is calculated for a service industry, where there is no like we discussed a couple of weeks back, there is no inventory here. Yeah.
There is in the break-even, we don't need an inventory at all. Break-even is only the fixed cost. In the service industry, a lot of your cost will be fixed cost out there. And then when we are looking at the, what you call it as contribution part of it, we are looking at the number of services, number of units. For example, let us look at a hospital, or let's look at a restaurant or something. Number of services that I do, number of patients I service, a number of customers I service, etc. So that becomes basically the break-even point. But most of your fixed, the concept will remain the same. The fixed cost concept will remain exactly the same itself. And my variable cost concept also will remain the same, because, for example, for every patient or every a customer that walks into the restaurant, what is going to be my part of my variable cost? That is certainly going to be there. And there are certain aspects that are going to be fixed, that's going to remain. So the variable and cost, the fixed cost concept will exactly remain the same. It does not change.
Sure, sir.
Especially regarding the exam, if you can tell the type of questions, sorry, 1 second. Type of questions and the total marks for all. The questions will be in 3 parts: Part A, Part B, Part C. Part A will be financial accounting. Part B will be cost accounting. Part C will be finance part of it. And all the 3 parts will have 2 subsections. That is, one part will be purely theory, that is the concept, question and concept, and the other part will be numerical. Okay. The exact marks, etc., it is not ready yet. The paper will be ready only tomorrow morning. So I wish by the time we have the next live session, I'll be able to give you a complete update on that, because I'm not still ready with the end-term paper. But this is what I have thought about. 3 parts, each will have 2 subsections. Our quiz till session, week 12 is ready. That is what it is. So, but we took a little, as Mr. Ranganathan said, we took a little more time on the financial accounting part of it. Though I had initially planned for 4 weeks, it got extended by a week more. The reason was I wanted to stress a little more on the balance sheet and the P&L, which is what we would use again in the finances part of also, the ratios and the basic concept of balance sheet. That is the basic concept of equity and debt part of it, and the basic concept of the assets is what we are going to use it in the finance part. So that got stretched by a week.
One more question I have.
Sure, sir.
The financial accounting predominantly talks about external facing for investors to make a decision, etc.
Yeah.
And now, in the cost accounting, we have talked about operating leverage. Now, is there a way of getting a glimpse of it, though it is not published by the management, it is internal looking? Is there a way to get a glimpse of that from the publicly available document? Because that could be an important factor how companies efficiently manage.
Publicly available document, quite difficult, sir. Quite difficult. You'll have to sort of, because publicly available document are only these 3. Unless one is able to get behind each of those aspects of the cost part of it, get into the much more details of it, it's not going to be that easy to decipher that. So what happens is we take proxies. We look at a competitor's industry where we have access to data. So we take that and then we try and see if we can build a proxy on that. Any other question? Mr. Nimesh, Ramakrishnan, Vikash. I have addressed all the questions that I received on the email, that is the discussion forum. I mean, I'm not addressing questions which related to the voice quality and other things. That is for the NPTEL team to address. But anything with regard to the subject, I have sort of taken care of, I think, addressing the whole thing.
So while introducing the cost accounting in the very first chapter,
Yeah.
you talked about opportunity cost.
Yes.
One of the example you started the whole session was with starting manufacturing some wire mesh toys in your courtyard, which
Yeah.
was otherwise anyway used for your home. There is no extra cost.
Sure.
But
Sure.
there I had asked a question. I don't know whether I saw the thing.
Uh,
The, the, the material you purchase, the wire mesh you purchase from the market,
uh,
that would have earned the interest in the bank if you are invested. So would
yes.
that be a cost
Yeah.
opportunity
I
cost
mean,
lost?
that was your question in the mail also. See what happens. For example, when I talk about in this particular case, that is, you talked about in the notional cost. That is what, if I remember right, if you had asked me, when I say that notional cost, I will include it as a notional cost. That is because I'm using my money. If I'm not using that money would have sat, or if I borrowed that money, I would have to pay interest. So I will include it as a notional cost. Opportunity cost will not come there. Opportunity cost, when it will come, if there is an opportunity loss. For example, I would have kept that money in a State Bank of India fixed deposit or whatever it is, and that would have earned an interest. And because I'm using that money to purchase the wire or whatever it is, I am not keeping I'm losing that interest, which I would have ideally earned. Then what happens is I will take the opportunity cost. I will not consider the notional cost. I will take the opportunity cost, because the notional cost will not even figure out there. The opportunity cost will basically figure there. It is either the notional or the opportunity. Opportunity will figure only if there is an opportunity loss. I said that I have just retired and I'm doing this. So no opportunity loss for me. So I will have only a notional cost of labor, my time. Whereas if I resigned my job and then taken this as a full-time activity, then what happens? The cost I will associate with labor cost will be the opportunity loss that I have foregone because of doing this job. Am I with you, sir?
Yes, sir. Thanks.
Yes, Mr. Nimesh, if you can email which are the specific numericals from the assignment, which specific assignment that you're not very clear, either me or Mr. Suhail my TA will email it to you, email you the solutions, complete solutions. Not a problem at all. Already mailed it and I got it saying it will be uploaded. Okay, then it will be uploaded, sir. I think any mail that Sohail, you have to upload the solutions. Yeah. Okay. Yeah, I mean, Sohail will upload the detailed solutions, sir. Sure. Which week you any specific week you're referring to, Mr. Nimesh? Any specific weeks assignment, you mean? Week 5. Just take care of it. Yeah, it will be done, sir. It will be done in a day's time, maximum. We'll upload the transcript also as early as possible. You're based out of Bombay, sir, Mr. Ranganathan?
Yes, sir. I'm based out of Bombay, but currently I'm in Trivandrum.
Oh, okay.
I'll be returning later next week.
Okay. Okay. Because the idea is this course only gives you the basics. I think beyond this, if one wants to learn more, I think we got to pick up a stream which is of interest and then move ahead with that. And I think that's going to go a long way in that sense. That's
Yes, sir.
you get a complete hang of the subject. This is a very elementary or a basic introductory course, let's say.
I was just hoping that you will start the next course, which is the valuation of a company from investor perspective on NPTEL platform. I'm just waiting. I'll be the first to register. Ready to
Thank you,
start.
sir. But I'll have to start the recording. Maybe once this is the first course what I launched in. So based on the response, I will certainly do try and see if I can record it because the recording takes a lot of time along with our other activities. It took almost about 4 months for us to finish the 30-hour recording and then editing and so on. So we will try and do it. Maybe that's my project for 2024. Let's see, sir. Any questions, Mr. Harshdeep? The extent to which an organization uses fixed cost and the cost structure is operating leverage, or it's basically the fixed cost is not, we are not looking at the fixed cost sort of continues, remains fixed. It doesn't change in that sense. And fixed cost is, I would say, a constant cost that basically remains in the organization, or irrespective of your kind of manufacturing, what you do, and so on and so forth out there. So,
In your examples on cost accounting, especially the managerial decision, how do we take, given certain set of constraints, how do we maximize the company's revenue and profits?
yeah,
In real life, actually, the constraints will not be so mutually exclusive.
yes,
Uh, is there any financial modeling tool available which will directly do the variety of options out of which we can choose one? In reality, there won't be one option. It could be a range.
yes, sir. Certainly, it could be an array of things. I mean, we have taken only hardly about 2 or 3 constraints out there. There will be multi-million constraints, and then all these constraints can also be highly correlated in that sense. There are tools, there are some optimization tools that are available. I have not personally used any of those, but there are tools I can always check and then get back to you, sir.
With AI coming in, there will be a plethora of tools. I mean,
Yep.
opportunities.
There are plethora of tools, but only thing is none of it. I mean, none of it is foolproof. There's always been what do you call it as some amount of inching forward. That's what is happening. Um, uh, None of it is sort of perfectly modeled or is universally applicable. It also gets modeled based on the kind of industry or the kind of business that you operate and so on and so forth out there.
True, sir. In fact, in your examples, we have some cases we have considered that a manager thinks that by spending additional budget on advertisement, so much can be the
Yes.
sale volume, which
Yeah.
by itself there is no validity. I mean, it's an assumption.
It's another pure. See, what happens is, and the top management, when they discuss, I mean, they are each one, I mean, the team is going to come with array of options out there. And this is only going to be jugglery. That's what we are going to do. And you're going to try. I mean, there's nothing. The marketing guy can back it up with says I've done a market analysis and so on and so forth. But unless one actually gets to the field and solves it, it's not going to be. It's not going to be a fact to believe upon. It's only an option which they are trying out. So the options what we took in that. That example was very few. I mean, just about 5 or 6 scenarios what I took. But in real life, there are a lot of other constraints. And because we take only about 6, 7 costs out there, shipping cost, packaging cost, and so on. But in a real life situation, you will have hundreds of different costs. And some costs cannot be controlled, some costs can be controlled, and some costs you have alternatives, some costs you don't even have alternatives. So all those factors come into play.
Excuse me, sir.
Sure.
Actually, I have a doubt regarding a question that was asked in the assignment.
Yeah.
Yeah, it was asked that which is not a part of the prime cost, and the options that were given to us were packaging cost, transportation cost to bring materials to the factory, GST on raw materials, and overtime premium to pay
Okay.
to the workers.
Okay.
Transportation cost and overtime premium paid to the workers is a part of a prime cost. But how packaging cost and GST on raw materials is not a part of prime cost, because the correct answer is GST. But if we consider a packaging cost, if it forms a part of a primary packaging cost, if we consider it, then it should form a part of the, it should be a part of the prime cost. Then why it's not?
Normally, packaging is not used as part of your manufacturing process. Packaging is always seen as what you call it as an additional value add that you're doing for a product. For example, let us look at any of the product that has a very, let's look at a perfume bottle out there. That has beautiful fancy cartons that get there, that come in, that sort of is in which it is the perfume bottles are packaged out there. But it is not a prime. It is the core is what goes into manufacturing that perfume becomes the core. That is what is the prime. This is an added cost. This is a value add. This is basically not adding any value to the product in as such. This cost is basically adding to the what do you call it as the appeal that the customer is going to have for the product. So normally these are not part of the prime. Prime means core. Core means core into manufacturing or making that product or giving that particular service out there.
So we are going to consider packaging cost as a part of manufacturing overheads.
Normally, yes, not even manufacturing overhead. I will say selling and distribution overhead.
Okay,
It
but
is not even manufacturing, it is going to selling and distribution. I need to have a fancy package. When I need to have a fancy package, I need to do that. That is because basically that is part of my selling. That's part of my way in which I advertise my product and so on. So that will be part of my selling and distribution, not manufacturing. Certainly not manufacturing.
okay, sir. Thank you.
Thank you. Can we say primary packaging cost is prime cost and packaging cost is secondary? Well, prime cost is the cost which are essential. If the primary packaging is essential, then yes, I would sort of say, let us sort of keep that. For example, I have an oil, cold press oil machine or whatever it is, and I'm packaging it in bulk, whatever it is, in a containers which of 100 liters or 1,000 liters or whatever it is. That primary packaging that basically goes on out there. You could say prime, but still normally prime means only the core, that aspect. If unless until it is essential, it will not be part of the prime.
So in one of the example, talk about managerial decision. we talked about whether should we drop product A or continue with product A.
Yes.
And we concluded that even if we drop the product A, there is a inherently overhead, some amount of overhead cost is associated with the product.
Yes.
I mean, that I am finding a little confusing, because when you're dropping the product altogether, isn't that cost to be allocated entirely to the other product?
The cost is to be allocated entirely to the other products. So I know which example you mean, but the product is giving me some positive contribution. Let us say my product is, the total sales value is 1 lakh for the product. My variable cost is only 30,000 for the product. That means I get a $70,000 of 70,000 rupees of contribution out there. Now my fixed cost, that is shared, because let us say the fixed cost is only the floor space that I share for the product. My fixed cost itself is 90,000. That means the fixed cost, that is the shareable fixed cost allocated to that product, is 90,000. Agree. That means what's happening? My loss is 20,000 out there because I manufactured the product. If I do not manufacture the product, what is my loss? My loss is 90,000 until I find an alternative. If I find an alternative, I drop the product A, and in that space I'm going to manufacture something else, and there is an alternative, yes, then we look at it differently. In the example what you said, that is that cost not shared by the other two products? It will be shared by the other two products, provided the facilities which get loosened, which get released because of dropping a product, is also going to be utilized by other two products. Then, well, the fixed cost will automatically get transferred to that. If the facilities that get released because of dropping the product is not being utilized by the other two products, then this fixed cost remains as a fixed cost, which eventually will be borne by the other two products, but your loss will be higher.
I got that. Let's look at the problem from a different way. Suppose we started the factory with the intention of producing product A and B, but we started with product B, right? And then at some point in time, we are asking the same question: should I start with A or should not start? Then will the answer be different?
The answer will not be different. See, when I start with, when I might have an idea of starting A and B, agreed, but I'm producing only B. That means what is happening? All the fixed cost I'm assigning to product B. Now I start product A suddenly. Then what happens? My product B is absorbing all the fixed cost out there. And then what happens? I will say I will not allocate any cost, any fixed cost to product A. Perfectly fine. But then in the market, your price of product B will be far higher compared to the competitors, because you are not only bearing the fixed cost of product B, you are also bearing the fixed cost of product A. And the product A, if you don't allocate any fixed cost, the price of product A in the market will be far lower as compared to the competitors out there, because you are not charging any fixed cost to it. Let us take an example, sir. I'll take numbers. Product B is selling, I'm getting a revenue of 1 lakh. My fixed cost for my entire factory is 60,000. And I'm charging the entire 60,000 to product B as a product. But I have the facility can be used for manufacturing product A. The capacity is excess. I can use it for manufacturing product A also. So because I'm charging the entire fixed cost of product B, my margin will be lower because the market decides the price. So my margin will be lower. Or my price at which I'm selling the market will be higher if I don't have a market-driven price. Now what happens? I manufacture A. I'm not charging any fixed cost because I'm allocating everything to B. So the product A will sell only on the variable cost of the process. So what happens? Ideally, when I decide that I'm going to manufacture two products and I create the facilities for these two products, I will say what is the fixed cost that is to be allocated for A and that is to be allocated for B. But since I do not manufacture A at the beginning, I'm allocating all the fixed cost to B. But the day I start manufacturing, I am going to allocate the fixed cost partly to A and B, divided between A and B.
Yeah, exactly. In that situation, so just at the time of introducing product A, when we do the calculation, we find that product A will improve the margin for product B, but by itself it will not earn profit. Still,
Yes.
will we go ahead?
Still we will go, but I'm looking at in that case the overall for the company. By introducing A, am I able? I mean, it will improve the margin for B, but the part of fixed cost which I'm allocating to A, is A able to absorb some part of that fixed cost? If A is able to absorb some part of the fixed cost, then I'll still go ahead. For example, the fixed cost I said is 60,000. 30,000 is to A and 30,000 is to B. Now, because I am allocating only 30,000 to B, my margin in B is improving. And because I'm allocating 30,000 to A is able to absorb only 10,000 of that fixed cost out there. Still, I will go ahead because out of the 30,000, 10,000 is being absorbed by A. That contribution is positive. So then my overall margin will improve for the company.
Is there any real life case, something like that you can think of?
Sir,
Where
most
people
of the
introduce the product? I mean, for example, any FMCG should have similar choices.
many of the FMCGs, many of the multi-product firm will always have one or two basically laggards out there which will not sell, which are just there to to have a presence out there. Even in the auto sector also. For example, if you look at Maruti, certainly it will be like that because huge array of models. Ramnik, yeah. The process in which all the service department cards are reassigned to production departments is basically, service department cards is basically assigned. I've taken some examples also in that. It is basically what we call it as apportioning these overhead costs out there. Service department costs, we are basically apportioning this to the production departments out there. Apportioning of these overheads. Because all the multi-product firm, even the service industry, for example, even the service industry, many of the products you are just there for the presence. You may not make any margin in that product, but you are just there for the presence out there because of the array of products array of the services that you offer out there. Certainly, yes. Yes, Harshdeep.
Sir, can you explain that the taxes paid on the raw materials is taken as a part of the prime cost? While like property tax and sales tax, we don't often consider it as the overheads while preparing the cost sheet. Why it's
Madam, when we look at the prime, when we look at the cost of a product, raw material, I will always look at the landed cost. That is what I stated in one of my videos also. When I say landed cost is always after paying the requisite taxes or GST or whatever it is for that. And the landed cost also means paying of all the duties, customs, transportation, everything out there. So that is when I enter in my balance sheet, the cost of my inventory will be the raw material inventory cost, will be the landed cost of the raw material inventory. So naturally, that will become part of the prime cost. The other aspects, what we talked about, the property tax and so on and so forth, that is not specific to any specific product or specific unit out there. Supposing even if you do not have any production in a particular year, your property tax still remains the same or you will have to pay the same. So these are all what is called as overheads because these are not dependent on the output out there.
But what if that sales tax is related to that particular sale of the product for which we are preparing the cost sheet?
Sales tax is prepared. Basically, what happens when a sales tax is prepared, you are passing the sales tax on to what do you call it as the customer who is going to buy it from you. Sales tax is at the end of it, not at the raw material stage. It's at the end product when you manufacture the product, when your product is ready, then when you're selling it, that is when the sales tax comes in. So it is not part of the prime cost. And it happens only if you sell. If you don't sell, if it remains as inventory, there's no sales tax on that.
Okay, sir.
Allocation, apportionment, Ramnik, when I divide in a multi-product firm, when I divide a common cost between various products out there, when I divide the common cost, that is where I apportion it out here. For example, I have a employee welfare scheme for, and I have about 3 or 4 products out there. I divide this cost of the employee welfare into 3 or 4 products. Yes, then I basically am apportioning it out there. Allocation, normally these are sometimes what happens is in that example also what you would have seen, the service department cost, that basically what happens, it gets allocated based on the usage out there. So if there is a particular attribute based on which I am able to divide, then basically that is what we call it as allocation in that particular case. Yes, Harshdeep. Yeah. We are currently in week 8, is it? If I'm not wrong, Mr. Langanathan. Week 9, week 8.
Yeah, we are in week 8. Week 9 is yet to be
Not yet
released.
uploaded, right? Yeah, week 9 they'll upload. So 4 more weeks. I think it go until mid-April. Depending on the feedback and the response, I will decide whether I have to sort of edit some videos if required, and or relaunch the course. How many times in a year we sort of launch this course extra. Yes, your understanding is right, Mr. Ramnik Singh. And please feel free to share your feedback or email to me. In case you feel that some edits are required in the videos, some changes are required in the videos, etc., please feel free to communicate that so that I can ensure that it is done for the next round. I think next round, if I decide to do that and launch it, maybe sometime middle of this year, whatever. Yes, ABC technique, of course, used for even salaries and wages and salaries and etc. Because if, for example, a supervisor is there, he's going to take care of, on a shop floor, he's going to take care of about multi-products, 3 or 4 products out there. Then I would certainly resort to ABC, if possible, to allocate the cost of a salary also. Am I with you, Mr. Ramnik? Our email IDs were also given in the last live session. I think both Suhail had given my email ID as well as his email ID. So if you feel that you want to write to me, you can also write to me straight away with your specific feedback. Feedback and in terms of the content, in terms of delivery, everything, it's pretty welcome. Can we use calculators in our exam? I think that we will have to check up with NPTEL. I think you should be allowed to use calculators, because otherwise, without calculators, you can't do most of these things. Especially when we talk about net present values and IRRs and etc., it's always better to use calculators. Normally, I even recommend Excel based, but I'm not very sure. Oh, okay. Not mentioned there. I will sort of. Thanks for letting me know this. When I prepare the end term paper, I will send it across along with the specific instructions. I'll have to check up with the NPTEL office if it's Excel is allowed. If Excel is allowed, I would prefer to give the paper on Excel itself so that you can right away solve it right there. If Excel is not allowed, then I'll have to give it you on a paper. Then at least calculator will have to be definitely be allowed. Just check up if Excel is allowed for the NPTEL. If Excel is allowed, you don't need a calculator. I'll just give the question paper on Excel. Normal. But I don't know. I'll check up and confirm it to you. I'm not promising. But Excel or calculator, one of it will be definitely be there. Without that, you can't do an accounting exam. As I said, it's more the conceptual side because, for example, if you look at the financial accounting part of it, somebody would have started off with debit, credit, journal entry, ledger account, and things like that. That could be more learning to prepare a financial statement. Our objective is not that. Our objective is to more understand what is a financial statement, or understand what is a cost sheet, understand what is a cost statement, etc. So kept it more conceptual in that sense. So I didn't go in the typical traditional way. I said the other textbooks you can pick up. You can pick up the other textbooks. I'm not sure, but you have to be a little careful when you use the other textbooks because that could be, especially in a financial accounting textbook, would be more in a traditional format. So you have to be a little careful when you pick up the textbook out there. But all textbooks give you the same kind of information. The valuation course, Mr. Ngal, if I sort of go ahead and offer, it will not be a 30-hour course. It will be maybe a shorter, maybe a 15 or 20-hour course at least. That is what I'm able to visualize so far. So it will be a shorter, smaller course.
That'll be a 4 weeks or 8-week course.
It will be 8 week, maximum 8 week. Beyond 8 weeks, certainly not. That is all. Because what happens when I teach live, I use a lot of case studies. I use case studies from the Harvard Business School case studies or some other Ivy League case studies out there. So we solve it using a case. In an online mode, we will not be able to use a case study per se. So I'll have to build in, so it will be about 6 to 8 weeks maximum. I mean, that is what I'm thinking on. I have to design it and then start the process. That's going to take some time at least. I'll be in touch with you. I think I can drop in a mail moment it's up and it's live. And
Sure, sir. Thank you. That will be helpful.
connect on LinkedIn. I think I saw that. So profile. So I'll try and do that. Okay, if there are no questions, then I think we can close the live session. I think we're almost all to 7:20, so maybe 10 minutes more. But if there are questions, I can take it. If there are no questions, I can close it. Feel free to write to me. Not a problem. I'll certainly respond. I'll either in the discussion forum or to my email. I'll certainly respond. Okay. Okay. If there are no questions, then I would sort of wind up. Thank you. Thanks for joining. Thank you, sir. Thank you.
Thank you, sir. Good night.